Netflix Q3 earnings preview. Will KPop Demon Hunters help streamer beat estimates? Benzinga and Yahoo Finance LLC may earn commission or revenue on some items through the links below. Streaming giant Netflix Inc. NASDAQ NFLS no longer reports subscriber figures with its quarterly results, which can make management commentary on past and future content even more important in reading between the lines of how the company is keeping its current subscribers and trying to add more. The company reports third-quarter financial results on Tuesday after market close. Here are the earnings estimates, what analysts are saying, and key items to watch. Earnings estimates. Analysts expect Netflix to report third-quarter revenue of $11.51 billion, up from $9.82 billion in last year's third quarter, according to data from Benzinga Pro. Trending. Amazon and NVIDIA partnered with this robot chef. Now individual investors can too. The company has beaten analyst estimates for revenue in 8 straight quarters. Analysts expect Netflix to report third-quarter earnings per share of $6.97, up from $5.40 in last year's third quarter. The company has beaten analyst estimates for earnings per share in 6 straight quarters and in 9 of the last 10 quarters overall. Guidance from the company calls for third-quarter revenue of $11.526 billion and for earnings per share of $6.87. What analysts are saying. A strong content lineup that included KPop Demon Hunters and several live sporting events could help the company match guidance, Bank of America Securities analyst Jessica Reif Ehrlich said in a recent investor note. The analyst reiterated a buy rating and $1,490 price target ahead of the quarterly results. Ehrlich sees subscriber momentum in the quarter coming from ad-supported plans and live events. Ehrlich also highlighted Netflix integration with Amazon.com in the fourth quarter, which will expand ad buying options. The analyst said the integration could improve Netflix's ad demand. Here are other analyst ratings on Netflix and their price targets. Seaport Global, upgraded from neutral to buy rating with price target of $1,385. Citigroup, maintained neutral rating, raised price target from $1,280 to $1,295. Luke Capital, upgraded from hold to buy rating, raised price target from $1,150 to $1,350. See also, the ChatGPT of marketing just opened a $0.81/share round. 10,000 plus investors are already in. Key items to watch. Netflix's third-quarter content slate included the highly successful KPop Demon Hunters movie, a second season of Wednesday, several live events, and the third season of Squid Game, which came out with only a couple days left in the second quarter. Netflix, NFLX, reported its Q3 2025 earnings yesterday, October 21, after the close of markets. While the streaming giant posted in-line revenues, its profits fell short of expectations. In this article, we'll discuss why it makes sense to buy the dip in the stock that has looked weak since hitting its record highs late June. Netflix Q3 earnings. In-line revenues and EPS miss. Netflix's Q3 revenues grew 17% year-over-year to $11.51 billion, which was in line with the company's guidance as well as street estimates. The company's operating margin, however, came in at 28%, compared to the 31.5% it had guided for. Netflix blamed the miss on a tax dispute in Brazil, which it hadn't baked into its forecast. A lower-than-expected operating margin meant that the company missed earnings per share, EPS, estimates, and the metric landed at $5.87 versus the $6.89 that analysts were expecting. Beyond Meat is expanding at Walmart as a short squeeze heats up. Should you buy BYND stock now? Can Nvidia stock hit $300 in 2025? Are quantum stocks a bursting bubble? Here's what our top chart strategist is watching now. Get exclusive insights with the free Bar Chart Brief newsletter. Subscribe now for quick, incisive midday market analysis you won't find anywhere else. Meanwhile, Netflix noted that if not for the nearly $619 million expense related to the Brazil tax issue, it would have exceeded its operating margin guidance. Importantly, The company added that it does not expect this matter to have a material impact on future results. Netflix expects revenues to rise 17% in the current quarter, led by a combination of membership growth, an increase in ad sales, and higher pricing. Responding to an analyst's question over the outlook for 2026, co-CEO Gregory Peters said that the business is very healthy. He pointed to strong engagement in the quarter, where Netflix had a record share of TV time in the UK and the US. Should you buy the dip in NFLX stock? I remain bullish on Netflix stock and see the post-earnings dip as a buying opportunity. Here's why. Ad business continues to grow. While Netflix does not provide a dollar figure for its ad business, it reiterated that its ad revenues are on track to more than double in 2025, following similar growth last year. Responding to a question on whether revenues could double in 2026 as well, while Peters did not give a definitive answer, he said, "We are feeling good about our growth trajectory. I believe Netflix has just about scratched the surface when it comes to the ad business, and given the strong engagement on the platform, it would be a good proposition for advertisers to reach their target audience. While the company's ad revenue might not keep on doubling annually until eternity, it should continue to grow at a brisk pace." Live events. Live events have been a battleground for streamers who have been scrambling to secure deals in the space. Netflix has also been focusing on live events and has bagged many deals, including broadcasting rights for the 2027 and 2031 FIFA Women's World Cups in the US and Canada. It has also partnered with World Wrestling Entertainment and has a 3-season contract for Christmas Day NFL games. Live events help make Netflix even more valuable for its members, which results in higher engagement and retention. Video gaming. Netflix sees gaming as a $140 billion market globally, excluding China and Russia. This does not include the related ad revenues, which the company is currently not participating in. Gaming not only increases Netflix's value proposition for users, but could also be a revenue opportunity in the future. Merchandise sales. Netflix is doubling down on merchandise sales and has partnered with Mattel, M-A-T, and Hasbro, H-A-S, for merchandise sales of KPop Demon Hunters. As Netflix creates more iconic characters, merchandise sales could start becoming a significant contributor to the company's earnings. Reuters. Shares in SAP were volatile in early trading on Thursday after Europe's largest software maker forecast full-year cloud revenue at the lower end of its outlook range. SAP said it expected cloud revenue for 2025 to be at the lower end of its forecast of 21.6 billion to 21.9 billion euros, $25.2 billion, $25.5 billion. The stock was down around 2% at 9:35 GMT, reversing course after rising as much as 3% earlier and tracking a fall in its U.S.-listed shares. We did not see an Oracle moment, but some fears about a weak report looming did not come true either, a local trader said, referring to Oracle's upbeat view on its cloud infrastructure revenue. Some analysts also saw positives in SAP's comments on demand and flagged stronger than expected cloud backlog rising 27% year-on-year. The cloud backlog growth was especially strong given broader concerns of risks to software players caused by artificial intelligence, Morgan wrote in a note. SAP briefly became Europe's largest company by market capitalization in March, but gave up the European crown later in the year in part due to worries that AI will disrupt the software sector. Up to Wednesday's close, it was up 0.2% so far this year, following a 70% rise in 2024. Still, it is now the third biggest company by value in Europe, following the chip gear maker ASML and luxury behemoth LVMH. $1 equals 0.8575 euros. Reporting by Paolo Laudani and Jans. Editing by Anna Praknica. Netflix's stock fell 10% on Wednesday, extending losses from late trading Monday, when the shares began to slip in after hours following the release of its third-quarter earnings. The decline resulted from a one-time $619 million tax charge related to a Brazilian tax dispute, which impacted profits despite strong underlying growth. Netflix's stock fell 10% on Wednesday, extending losses from late trading Monday, when the shares began to slip in after hours following the release of its third-quarter earnings. The decline resulted from a one-time $619 million tax charge related to a Brazilian tax dispute, which impacted profits despite strong underlying growth. CFO Spencer Adam Newman detailed that the expense stemmed from a court decision upholding the contribution for intervention in economic domain. Further explaining, it's not an income tax. It's a cost of doing business in Brazil. It involves a 10% tax on certain payments made by Brazilian entities to streaming. This suggests that the expense is not specific to Netflix and will impact other companies. Netflix updates future guidance. We had a good Q3. We had revenue in line with expectations. Our operating income would have exceeded our forecast absent the Brazilian tax matter, said Gregory K. Peters, co-CEO, President and Director, Netflix.